So let me get this straight. Tesla smashes earnings all across the board in revenue and profits, EPS, everything. But yet the stock is down 15%. What sense does that make? Well, welcome to the stock market, especially to Tesla stock. But in this video, we're going to look at what to do, why it's down, and literally just what to do as a Tesla investor. I'm getting a lot of messages. People are very frustrated with the fact that they did great in the earnings report, but why is the stock down? And someone who's been in the stock market for 10 years, well, I think I know why. I mean, I'm pretty certain why it's going down and why I think it's a great buying opportunity. Nonetheless, in this video, we're going to be looking at what to do. Obviously, not financial advice, but I'm going to be telling you guys what I'm going to be doing as well. So if you guys are ready, man, smash that like button and hit subscribe if you haven't already. Let's go. So first off, let's answer the question, why is Tesla stock down about 15% since the earnings report? Well, one of the reasons why it's down is because Elon did say in Q3 there's going to be less production because there's going to be a lot of upgrades in the current factories. So when there's lower production, that means there's less delivery. So that's going to be very interesting to see what's going to happen in Q3. Right off the bat, pretty much he's saying is that don't have high expectations for Q3 deliveries. That's what he's trying to say. Because of upgrades. This is great for long term, but for short term, this is definitely not a good thing. The second thing he said is that if the Fed continues to increase rates, which it looks like they are, and I don't understand why they are, a little bit frustrating there, but if they do increase rates, Elon did say Tesla has to reduce prices on their vehicles, meaning lower margins. Now, in hindsight, this isn't really a bad thing either. Their COGS, or cost of goods sold, for each automotive vehicle that they sell per unit is getting less. So that's really good. That's going to help in their margins in the long term. But in the short term, if they have to cut down prices again, we can see that operating margin go down, which goes to my third point. The reason why the stock went down is because operating margin was at 9.6%. And I'm not gonna lie, when I first saw this number, I was just like, oh my God, that below 10%, that's absolutely insane in a bad way. But how the heck did they beat earnings with an all-time low operating margin for the past 2-3 years? How is that even possible? Well, let's go ahead and take a look at their financial summary and you'll know why. There's a lot of good information that I think some of us have missed that I think you guys need to know if you're a Tesla stock investor. So check it out. This is actually some good stuff, good juicy stuff. So operating margin in Q2 2023 was 9.6%, which is absolutely terrible, like 493 basis points down from Q2 of 14.6. I mean, just looking at that and comparing the two, it's pretty darn bad, but how is it that their net income gap is 2.7 billion, but their in Q2 of 2022 was 2.2 billion? This is the part where it gets very interesting because yes, their operating margin is less from a year ago in Q2 of 2022 compared till now, but their net income has grown. So what does this tell us? This tells us that Tesla can make more money with a less operating margin. Why is that? Well, again, COGS of automotive is going down. We have energy coming into play. We got services and other things coming into play that is dragging the net income higher and higher. Another thing that you guys want to take a look at here is the total revenues. 17 billion in Q2 2022. A year later, which is Q2 2023, almost 25 billion, a run rate of $100 billion in revenue for a single year. I mean, that's crazy. That's amazing that Tesla is now at $100 billion run rate for revenue. I mean, obviously in Q3, this is probably going to be closer to 27 billion. So it's going to be more than 100 billion, that's for sure. Even this year in 2023, I am predicting about 120 to 130 billion in total revenue. It's going to be very interesting to see what's going to happen in Q3. And in 2024, it's probably going to be closer to 200. Anyways, we'll talk about the long term in another video, but in this video, let's continue to go through the important parts. Now, free of cash flow was one of my concerns because in Q1 of 2023, it was at 441 million, which was really, it wasn't really good because that, if we look at the credits, that's what the credits really made the money in Q1. But in Q2, over $1 billion in free of cash flow. That is crazy. Why is it crazy? Because unlike in Q1 where the credits came and helped them out, credits were actually less than half since Q1 of 2023 of $282 million. That's insane. So now the bears and the Tesla TSLQ, whatever their name is, whatever their ticker symbol is, have no excuse for this quarter for the free of cash flow, which is quite impressive. In my opinion, I think this is one of the biggest takeaway in the financial numbers in this quarter. Absolutely insane. Now, there is one concern from this financial report that I do want to point out, and that's the income from operations. It is down -3% since last year of Q2, and it's been going down since last quarter in Q1 of 2023. So hopefully in Q3, I mean, I'm not that optimistic for Q3, and that's one of the reasons why the stock is down. Hopefully we can see income from operations a bit higher in Q3 of 2023. But if they're gonna reduce prices, yeah, I don't think we're gonna see that in Q3. I think maybe I thought Q2 is gonna be the bottom, but maybe Q3 is going to be the bottom. Just have to wait and see what's going to happen. I'm gonna be predicting that in the next video coming. I just need more information in terms of pricing and what their plan is, because right now it's speculating right now what they're gonna finish off by Q3, end of the next two months or so. But nonetheless, overall, this was a solid financial report, beating expectations. I mean, I was shocked to see that they beat it at 91 cents. Although I was predicting 94 cents, the consensus was around 80 cents, 81 cents. So you could see the lowballing of Q2, of how bad it could have been, how bad Wall Street was priced it again. But Pejjy, man, they beat earnings. They beat Wall Street estimates. So why is the stock down 15%? Well, again, Elon did say that Q3 there's not going to be much production due to upgrades, and they may have to reduce prices even further if Fed increases interest rates. And obviously, Wall Street, institutional investors, that's who move the stock up and down. They only look at the stock for the next 6 to 12 months. They're not looking at it 5 years, 10 years like you and I, us Tesla investors are. So what they're saying is that, okay, if they're not going to be performing well for the next 3 to 6 months, why have it in Tesla stock? I can just take it out and, buy Nvidia or something, or buy Palantir, or buy other stocks that's going to do great in the next 3 to 6 months. And then once it's Tesla's time, they're going to come back in, maybe by end of the year. That's how they think. This is how they're not putting their money in for the next 5-10 years. They don't do that. They only come in for a quick buck, for a quick 3 to 6 month gain, and out they go to another stock. That's just how they are. But the good thing about this is, as Tesla stock and the company gets fundamentally stronger by having more earnings, higher cash flow, more revenues, and overall net income gap being a lot higher, these institutional investors will give Tesla a higher floor as we keep going forward. So that's a good thing, but this will take time. So the question is now, what to do? Obviously, not financial advice. I'm not telling you to do a certain thing, but here's what I'm doing. You guys ready? 2 months ago, I made a video saying why I stopped buying Tesla stock. I think that strictness of stopness is going to come to an end very soon. That's right. If Tesla stock is going to continue to go down, right now it's sitting below 260. And I've been buying 2 or 4 shares, just slowly, dollar cost averaging, and just touching touching the water with my toes, seeing what's happening. But if it goes below 250, and if it keeps going lower and lower, then you guys already know what I'm going to do. I mean, I have the cash piled up, ready to go, and you guys already know, man. You guys already know that I'm all into Tesla stock, and if it goes down and down and down, some people are saying it's going to go down as low as 180. If it goes down that low, looks like I got to go broke again buying Tesla stock. I mean, that's just ridiculous if it goes down that low. But I'm not in a rush as I was like in the beginning of this year where the stock price was at $100 per share. I think for the next 3 months, maybe 6 months, we will have an opportunity to buy Tesla stock at low prices. So I'm not rushing to buy Tesla stock yet. I'll rush into it if it goes below the 200. Then yeah, I'll probably rush into it. But I do think there will be an opportunity window between now until the beginning of Q4, you could say, or the beginning of Q4 earnings report. So literally end of this year, because again, Q3, I don't think it's gonna be I think it's going to be a beat, but it's not going to be a massive beat. Or it may be, I'm not too sure. We have to wait for how Shanghai deliveries are in the next, I think 10 days or so when this month ends. And we have to see what's going to happen with the Fed. If the Fed increases rates, we can probably see Tesla stock going to the low 200s, which I like to buy more shares at that point. But again, this is all short-term stuff. Short-term, as a Tesla investor, I've been investing in Tesla for, 2023 now, going to 2024, like almost 4 years now. And even if I buy in the low 200s or let's say in the mid 200s, it wouldn't really matter because I'm still in the plus. But I'm looking at this at least till 2030, man. Tesla stock, imagine what Tesla's going to look like in 2030. And I'm going to be making a fresh video, a 2030 stock price prediction for Tesla. And it's just going to be, Tesla in 2030 is going to look a whole lot different now. And if we just visualize it that we are in 2030 and we zoom out in the Yahoo Finance, we zoom out and we look at 2023 specifically, it'll just be a small blimp on the radar. That's all I gotta say. So just like how 2008 was, just like how 2000 was, and the other years that we had crashes. Just a small blimp. That is it. But that's what I'm doing. That's my plan. If you guys are a long-term investor, then I think we can agree. But if you're a short-term investor, swing trader, mainly in the high ups, not in the lows, I would probably say you have to stay away from Tesla stock because it is very volatile, extremely volatile. 1 minute the stock is $100 per share, then it's back to 300. It's really volatile. You never know what's going to happen in the short term. But that's all I gotta say. Long-term investors, get ready to buy the dip. Short-term investors, good luck. And of course, not financial advice. However, though, lately Tesla's been talking about licensing FSD to other automakers. If this happens, it's going to be a sheesh moment. Check it out. I've made this video here predicting what the stock price will be by 2030 if they do FSD, if they solve it, if it goes global, and if they license it. It's absolutely a sheesh and insane moment. All I say is that get your popcorn ready for that. Get your I Bought the Dip shirt or the Cybertruck shirt. I made it here. Use my truck code to get 10% off. And subscribe, and I shall see you guys in the next video. See ya.